we've restructured our business most recently, which allows us to actually, basically separate different licenses into different companies, as well as what we've also done is empowered our minorities and monetize their value up to the top of the group.
Hello, you're watching Proactive. I'm joined by Andrada Mining Chief Financial Officer, Hiten Uka. Hiten, very good to speak with you. You're out with your annual results and a great year for Andrada. Revenue's up by almost 90% as tin production from your flagship project ramped up. Take us through some of the highlights of the year.
Thank you, Stephen. Thank you for having me. Yeah, to actually talk you through the highlights, it's been a very good year for Andrada. Revenue has been up almost just over 80%. Costs have come down slightly, and we continue to drive our strategic objectives and milestones with regards to our overall tin, tantalum, and lithium strategy. Some of the highlights of this year really, have been, firstly, the production increase. So what we've done is we validated our expansion project that we did the previous financial year. What we can then see is that the tin production has increased, and as such, even though we've had slight steady tin prices, revenue has gone up on the back of the increased production. With the increased production, we also start seeing that the fixed cost dilution starts kicking in with regards to the various levels of costing. C1, C2 have come down slightly, and as well as the all-in sustaining. A point I'd like to also make across to our viewers is the all-in sustaining does include our capitalized waste stripping, and often some companies would include, some wouldn't. But for us, we like to measure ourselves with that capitalized waste stripping, which should come down over time. So one of the things that a lot of people can start looking forward to is that once we start stop the increased stripping, we should start seeing better results in terms of the all-in sustaining costs. With regards to some of the highlights, it really has been a combination of both the capital growth as well as the funding that we've managed to secure over the financial year. Two of the highlights really is the commissioning of the lithium pilot plant as well as the tantalum circuit. We've seen successful production from the pilot plant in terms of getting a on-spec batolite grade. We've also managed to produce tantalum, which has now been sold to our off-taker called Afrimat. With regards to funding, we've managed to secure quite a multiple streams of financing. They've been convertible loan notes that we've secured in July last year. Thereafter, we managed to secure a Orion finance package, which included a blend of equity, convertible loan notes, as well as royalty, all of which were done on an unsecured basis. And lastly, what we've managed to also do is get the Development Bank of Namibia in to actually provide continuous improvement financing, which has now sort of kicked off a project for the current year.
Hiten, you do say in the commentary that you're still looking for a strategic partner for the lithium operation. That's a focus. Where are you in that process?
So, the discussions with the strategic partners are ongoing, and I think, what users could probably, or shareholders can sort of see, what we've done this current financial year is really execute multiple sort of, I would say, transactions or cleanups. We've restructured our business most recently, which allows us to actually, basically separate different licenses into different companies, as well as what we've also done is empowered our minorities and monetize their value up to the top of the group. This allows us for ease of transactions at the lower levels, but also at the same time provides the same minorities with the exposure to the entire group and upside of even the licenses that they may not have previously had access to. So with regards to the strategic, it is ongoing, and the business is quite technical, and there are different sort of layers of commodities within those businesses. But we are progressing pretty well, and we hope to inform the market once we have concrete news to deliver.
Hiten, what's your 2025 financial year looking like so far, and what's the focus for this year?
So operationally, it's looking very positive. As you can see from our prior year, we've managed to get to a gross profit position, a positive position, compared to the previous year. And That was on the back of tin prices being around about $25,000 a ton. Currently, we've averaged about $32,000 a ton for the year to date. And, if you put one and one together, you start picking up, well, it's a much more positive position for ourselves, including, increased production, which we continue to do. We've got tantalum sales happening, which comes off as a credit to our all-in sustaining cost, as well as, the continuous sort of dilution of fixed costs as we increase the production. So from a operation perspective, it is looking very positive for us, and us as management, we continue to drive improvement across all areas of the business. With regards to the projects side of the business, we have kicked off 2 projects. One is the tin expansion, which really looks at a tin pre-concentration circuit that we'd like to put in front of the main circuit, as well as the continuous improvement project, which was secured from the financing from Development Bank of Namibia.
Hiten, I hope you'll keep us updated with any progress. Thank you very much for speaking with us today.
Thank you, Stephen.
That's Andrada Mining Chief Financial Officer Hiten Uka.